Hello, welcome to the sharpening session for today. Today is Saturday, October the 9th. Hopefully you guys had a great trading week that ended well yesterday. My name is Becky. My email address is down here. That's becky@traddictiv.com, and then there's also support@traddictiv.com, so you can email us on either one of those if you have questions. Let me just make sure that the disclaimers are up there being covered. So top left hand corner, that's where we've got the disclaimers. So by all means read them to understand, not just legally, but also to understand what you can get or what you can expect from these kind of videos. Now, sharpening sessions are a little bit different than the sessions we do during the week because most markets are obviously closed today. Crypto markets might be open, there might be other markets that would be open, but the majority of markets that we would be trading are closed. So that means that gives us time and space to be able to make more of a point on things, explore theory, answer questions, rather than just look at opportunities and place trades where we may not have the time to really explain something that's gone on behind that or why we made a certain decision. So we do these sharpening sessions to just expand on that and give people a little bit more of an understanding, like a theoretical understanding and knowledge. Now I'm just opening up the chat boxes because I forgot to do that. So if you're with me, let me know, say hi in the chat box. Any questions that you have, please let me know. Now we are streaming in different places. We're streaming on Facebook and YouTube and LinkedIn and other places as well, but also streaming inside our closed coaching session. So usually what we do about the halfway point, we'll cut the stream to the free streams and we continue within the closed coaching sessions for those who are obviously paying a small monthly fee to have access to that. Now, with that, during the week when we are placing trades and looking at trades, it's a very sort of natural thing to come to. Once we've placed one trade, we cut off the stream and we just place more trades in that second half. Obviously with sharpening, it's more theory and knowledge. So I'll kind of go by roughly the halfway mark, roughly about half an hour in is when I will cut the stream. Obviously, if I'm not done finishing a particular point or answering a particular question, I'll carry on, but it'll be around about the halfway point that we'll cut that stream to the free streams and continue in the closed one. Hello, Steve. Welcome. Nice to see you, as always. So with sharpening today, what we were going to focus on, and in fact, I've just realised I need to load my TradeStation. What we'll do just whilst that loads, let's just quickly show for those that might be watching the recording later or watching live in different places, this link here, tradewithufos.com/Becky. From here you can get your apps on different platforms depending on what you, it's updating, of course it is, depending on what platform you use. You can get your apps from here, you can get different technology from here, you can book one-on-one coaching from here, and you can also post questions here in a public space. Now that's great because if you post questions in a public space, then we can answer them in a public space. So it means that we can expand on things in videos because that question is public. So you get a whole video as a response to your question, but it also means other people can see it and other people can see the written answers as well. So we all learn from this space. So if you do feel comfortable to do that when you have questions, please ask them here rather than an email, but you can send an email as well if you want. So my TradeStation has decided it's now updating. I'll prove it. There you go. It says it's updating now. So we will wait for that to update before we look at TradeStation and go into what we were looking at. But in which case, what I'll do, I had two topics I wanted to go through today. Unless, by the way, if you guys have questions, that will always take or that will always be the most important thing that we go through, or the first thing we go through, is the questions you have. Whether that's come from questions on the tradewithufos.com/Becky or what you have in the chat boxes, we'll always do those things first. But otherwise, I always have backup things to be going through. So for me, I've got two things to be going through based on questions that have come through recently. The first one is on UFO stats, which of course I need my TradeStation to be loading. There we go. I need my TradeStation to be loading, and or top, we'll load top as well, to be looking at UFO stats. So let's just get this all loaded once it's finished updating. But also I had a second question, which was on how to log things, how to use an Excel spreadsheet to log things. Now those two can actually kind of come together. UFO stats and what they mean and how we log things can sort of go together in the way that we can use those stats to help us be more specific about what we're testing, and therefore I'll then show you how you can log things to test them. So we'll do that in today's session, but I'll keep my eye on the chat boxes if you guys have any particular questions or anything like that. Now let me just open up my chart there, and what we'll do as well is let's open top as well. There we go. So in the meantime, let's just come back to Excel whilst they're loading. So a very quick way that you can track things using Excel. It's a very simple, very basic way of doing it, but to me, very useful and very efficient way of doing it. Let's say, for example, there you go. Okay, we'll have to load a new chart. It's obviously from the update. It's not very happy there. So, sorry, now I keep flicking back and forth between things, but of course we need to make sure that that's loading and that it is loading. There we go. We'll look at that in a second. So since we're on our Excel spreadsheet, we need to be looking at what we could be logging. So let's say, for example, in this example, we're going to say that you're a stock trader. So if you're a stock trader, then one of the first things you might log is which stock. So you could call that market or asset or company, whatever. So let's say company, but you could call it market or asset. Company, you can then have your ticker symbol. So what are you actually looking at? And these are things that are tracking, stuff that makes sense to be tracking, stuff that is obvious to track. But as we go through and we build this out, you'll see that some of these columns are there specifically to help us with our testing, specifically to help us understand what may or may not be a good thing to include in our trading or in our methodology. So company, ticker symbol, you might have the date that you entered the trade, or perhaps date placed you trade, date entered the trade, date closed, either profit or loss. And then you could have your entry price, your stop loss price, your safety target, your final target. So these are all things that are, if you follow the UFO methodology, these are all things that are standard, right? There's nothing here that's new or nothing here that's going in a different way. Now, let's say, and you guys can give me examples, by the way, of different things you might want to track, just as a random thing to put here. But let's say, for example, you wanted to track the sustainability, right? So on your UFOs, which if we now have top, then we should, there you go. So on our UFOs, or on our auto climate even, we have our sustainability stats. So usually it would go up for 8 candles and we're on candle number 3. So that's how long does that market usually go up or down for, and where are we now relative to that? So let's say, for example, you wanted to track at what point you stop placing trades. At what point does the probability go down? So let's say sustainability stats was one thing you wanted to look at. So you can then just write here, sustainability. Okay. So then let's fill this out with a couple of, let's make them up off the top of our head. Let's just fill this out and sort of show how over time you might sort of build things. So let's say Apple, Google, Netflix. I'm doing the big ones, but you might have a couple of, I don't know, maybe some ETFs as well. Maybe you're doing Tesla, maybe McDonald's, maybe Kellogg's, maybe Coke. Maybe you double up on some of them again. Trying to think off the top of my head, IBM, Qs. So let's say this went all the way down to, oh, that would be the tickers, but you could then obviously put the company in, sorry. So Apple, Google, Netflix, and this could be XOP, I think is the oil ETF. SPY is US stocks ETF, or the S&P 500 ETF. Tesla, McDonald's, Kellogg's, Coca-Cola, Apple again, IBM, and NASDAQ ETF. So again, you could go down and you could put whatever stocks you look at, right? Date placed, let's leave that blank. We know what that would look like. Date entered, let's leave that blank. We know what that would look like. Same again. So you've just got the date that you did these things. And then the entry and the stop and the safety targets. So let's say, for example, let's maybe add a column in here and say outcome. Okay. So the outcome, if you are to just leave these trades, are either a stop out, therefore a loss, a break even because they've hit your safety target and then your stop loss, or a profit of some form, whether or not that's hit safety target and then your final target, or some form of management in between. So loss, break even, profit, that's the only things that can happen. So let's say you've got profit, loss, profit, break even, loss, 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 break even, profit, profit, loss. Now you might want to say, have a look at as well, is lost by what, profited by what. So you could say PL, like P&L, profit and loss. I'm going to make up the numbers, so please don't take this as a representation of numbers. I'm just making it up just to build this out and make a point. So let's say you won 500, you lost 200. You won 600, you broke even, that's 0. You lost 150, you lost 150, you lost 200, you lost 150, 0. You profited 1,000, you profited 1,200, you lost 150. Okay, so I'm doing this by showing that when you profit more than what you would lose when you're wrong. At least hopefully that's how it works out. Of course, if it goes past a break even, then it should go further than the other half of the loss, if that makes sense. So let's assume that we've put all these things in and you've got all of this information as well. I don't want to obviously take time up making up numbers and making up dates. Hopefully it's obvious what you might put in there. Let's maybe fill in the first one just to give you an example of what the rest would look at. So let's say you placed this on the 1st of October, it entered on the 2nd of October, it closed on the 6th of October. These might be weekends as well, I'm making it up. Let's say you bought it at, I don't even know what the price of Apple is right now, let's say 1,500, don't know. Oh, we don't want that to be a number. Let's say your stop was 1450, safety target, let's again make sure this is a number, not a date. Safety target would therefore have been 1550, and then let's say your final target. By the way, for those that don't know Excel, what's happening here is I'm typing in the number, but because the cell thinks that it's a date cell, it's coming back to me as a date, so I'm then having to change it back to a number, but you would work that out on Excel. So your entry, your stop, your safety target, final target, let's say the final target was 1850 or something like that, okay? Now you might want to add other things in here, such as amount of shares, dividends, things like that. Let's say you traded 10 shares, okay? So again, you would go through this and you would fill them all in. I'm not going to make them all up for all of them because it's just an example, but hopefully you can see how you would fill this in. So let's say the sustainability here was 8 out of 3. Again, these are going to need to be text, I think, to do it this way. Maybe fractions. 8 out of 3. That's gone to 2 2/3, so I'm going to make it text, I think, just so we can see it. I wonder if we come here. So this is for Excel. Again, there are some things that we look at that we want it to be up to 3 digits as half, up to 1 digit. I thought I might be able to change the, if you guys know, by the way, on the chat box, let me know. I thought I might be able to change the settings here so that I can have 8 divided by 3 so that it would look like that, but I don't think I can, in which case we'll make it text so we can do that. By the way, I see your question there, Fernando. I will have a look at that in a second. So let's say 8 out of 3. Let's put these all on the right hand side as well. Let's say the next one was 6 out of 3. And the next one was 2 out of 3. The next one was 1 out of 3. And then, and so on, right? Making up these numbers. I'm not even looking at whether or not we put them as a profit or a loss, just making them up. You would just log it as you go. Okay? So by doing this, you're then tracking and you're keeping a log of all of these trades that you've put on, and all of this is just sort of factual about the trade and things that were actually happening and that you placed the trade because of those things, and they're just tracking what happened. Sustainability, you place the trade whether or not it was 8 out of 3 or 6 out of 3 or 3 out of 3. You're still placing the trade in any case, but what you're doing is tracking, does sustainability have an impact on my trades? So over time, you would then, all you would need to do, by the way, is filter these. Come to data and filter. And you could filter by, let's say, the 1 out of 3s and add up how many of them were profitable. Filter again by the 2 out of 3s. How many of them were profitable? And so on. Filter again by the 3 out of 3s. How many of them were profitable? Now, you'd need a decent data set. They say at least 30. I say at least 100. At least 100 in a data set for you to really get a good idea. But let's say, for example, you go through and you realize that you had 20 trades that were 4 out of 3 or more, and you had 40 trades that were 3 out of 3. Let's put these all as text so it's easy to see that. So let's say you had 40 trades that were 3 out of 3. You had 40 trades that were 2 out of 3. And you had 20 trades that were 1 out of 3. So, in fact, let's maybe space that out a little bit. So 20, 40, 40, 20. And we'll just so it's in different columns, perhaps easier to see. So up here is your number of trades. And here was the sustainability. Sustainability. So 4 out of 3 plus, 3 out of 3, 2 out of 3, and 1 out of 3. Now let's say, for example, because you've got this data and you can filter by it, you might then say how many of these were profitable. So out of 20 trades, let's say 3, 10, 12, 10. Okay? And then you figure it out as a percentage. And again, I'm making up the numbers. I'm not trying to make any point. I'm just showing you how you do this. So to get it as a percentage, we would just do equals the amount of profitable trades divided by the amount of trades in total for that category, which in this case is 3 out of 3 on sustainability. And then just make sure that it's set as a percentage so you can see that. So then that way you come through and you can look at it and you can go, ah, let's zoom in on this. Okay. At this point, you can then zoom in and you can say, well, actually, as a percentage of the amount of trades that happened, this one did the best. It was more likely to be a profitable trade. Which was the least likely? This was the least likely to be a profitable trade. So now I update my plan. And now I say the sustainability has to be up to whatever that number is. 3 was our example here, right? But the usual, the norm, whatever that number is, whether it goes up for 5 candles or 10 candles or 3 candles, but whatever that norm is, you can then interpret that information and say, this is now what I do. So now your likelihood of winning goes up because you're now placing trades that have a much higher percentage probability of working for you. Now, I'm not necessarily saying that this is what you'll find, or that there might be, it might be that the numbers are 26%, 27%, 28%, 29%. And it doesn't make that much of a difference. It might be that it makes a huge difference. And it might be that there are loads of other things you can look at, such as other indicators, other correlations with other markets, auto climate versus the EMA versus something, you know, you could, there's so many different variables that you could track. But this is just an example of how you keep one thing, maybe 2 things on your list of things as you're tracking, ideally in a backtesting environment, so that you can become more efficient and more effective with your plan, because you're using actual data that's showing you these trades that fit this criteria worked better than these trades that fit this criteria. Therefore, I changed my plan to be more strict about that. Or it might be, let's say, for example, somebody could say, well, in which case, I'll only do these, right? Because it was the best one. It was the most efficient. It made the most money. You could do that. But what that means is you're only taking 20 trades out of 120. So you're actually not going to be placing trades very much anymore. Now, even though these were 25% and 30, they could still be profitable. Depends how far away your target is. So perhaps you say, well, I eliminate the ones that definitely aren't profitable, definitely get rid of those, but I trade all of these 3. And maybe you say, because this one has more likelihood of being profitable, I place 1.5% of risk on those trades rather than 1%. Or I place 1% rather than 0.5%. Or I put my targets further away. You know? But you're using data to do this, is my point. And all you need to do is have a column to track it, and then you can filter by it and add it up. It's a very sort of basic way of doing it, but it works, and you can get the numbers from that, and you can get the understanding from that. So, Fernando, sorry for waiting so long before I came back to your question. So, how does the Elliott wave indicator work in top? How to use it? I will be perfectly honest with you here, Fernando. I don't use Elliott wave, so I haven't used it yet in top. However, Jose uses it a lot in his sessions. I would suggest joining him on his, because he'll be able to answer that properly. If I did answer it now, I won't be answering it very well. So I don't want to go into something that I end up perhaps confusing you more on. What we can look at, if we add a study, Elliott wave turning points. Now, if you're talking about the turning points, by the way, this can be basically used to help us with target placement. So let's do that. And let's pick the pivot. So yeah, so this is showing us where we're likely to see turning points. So by using the Elliott wave turning points, you can see that perhaps if you're going up, if you're going long, that perhaps this line, let me see if I can change the color so it's easier to see. Like I said, I don't use them myself. That doesn't mean they're not good, by the way. That doesn't mean they're not amazing. I track everything. So sometimes it takes me a while to... let's make this like a really bright color. Okay, cool. So we can then be looking at this and saying, oh, okay, this line here might be a good place to get out for my first target or second target. Or perhaps I just go all in at that price. So I get in now or at the closest UFO and I get out there. So that's a very, very basic answer to your question about how to use the Elliott wave on top. Jose would be better placed to answer that question. However, I can always brush up on it in the next couple of weeks before my next sharpening session, speak to Jose and then come back on the next sharpening session and be able to answer that fully and properly once I've actually used it and I've played around with it myself and done some testing on it. So hopefully that helps. I know it's probably not the answer you were looking for, but hopefully you understand why. I never want to give answers to things I actually don't know the answer to. You know, I'd rather just tell you I don't know. Okay, right, so now that we're here, I'm just looking at the time. It's about 20 past. Let's start with these UFO stats and then we'll continue in the closed coaching whilst we go through that in a bit more depth. So with our UFO stats, and also how does it come into tracking things? To start with, if we come back to our Excel spreadsheet for a sec. To start with, let's say, for example, you're not sure which company to use if you're a stock trader. You're not sure what time frames to use. Maybe you're a swing trader and you have a choice between one set of time frames or another, and you're not sure. Maybe you're not sure on exactly what calibration to use on your UFOs. So let me just show you. I'm just going to put this on here. So UFO stats, and I'm going to really zoom in on this so we can see this very well. Not that much. There you go. So UFO stats are showing us probability of price moving between UFOs on that chart. Now by that chart I mean time frame, market and calibration. Those are the three factors that it's looking at. Also with the data set. So what that means is, if we come to top again, if we see here, the UFO stats are showing me 54.29. So 54.29% of the time, price is likely to hit that UFO and move to that one. Or hit that UFO and move to that one. It's 54% likely, I'm going to round that down, 54% likely that it moves between UFOs. Now, if I was to change, so we've got 54.29, right? If I was to change the time frame to a 240 time frame instead of a 144, that's gone from 54% to 46. Everything else has stayed the same. The calibration on the UFOs is the same, the market is the same, the data set is the same, as in the amount of candles that are loaded. I've changed one variable, which is the time frame, and now I have a different number. Now, what if I go back to my 144, and we're looking at MPLX. If I was to change this, so again, keeping the time frame the same, keeping the calibration the same, keeping the data set the same, and I now look at Netflix, that's got 58%. So each of those variables changes what the answer is, changes what that number is. So let's say, for example, we're now going to keep the time frame the same, the market the same, the data set the same, but we'll change the calibration. So I'm going to go to Edit Study, choose my AutoUFOs, and I'm going to change it to 0.5. See, that number went from 58 to 53. If I changed it to another one, and I did 0.6, it's gone to 57. What if I do 0.9? What does that do? Stays around about 57. And so on. You can play with it and you can see what works. So those 3 or 4 variables, in fact, let's just show you one more thing, which is the amount of data that's loaded. I think that's going to format. Yeah, there you go. So it's loading 500 bars. So again, we're looking at the same market, the same time frame, same calibration. We're not changing any of those things, but this is only, obviously, it can only do data calculations based off of the amount of data that's loaded. So from 500 bars to 1000 bars, we're going to see a different number. So we'll go from 58 to 55 because it's got more data. So it's got different data. So it's adding that in and it's giving us a different number. Now, when we are figuring out what markets we should be looking at, what timeframes we should be looking at, what we don't want to do is start with saying, I don't know any of those. Let me just play around with numbers, because you'll do that forever, right? There's an infinite amount of combinations of all of those different things. So I would say keep yourself strict on some of them. For example, you may only have, on a stocks watch list, you may only have 5 on a watch list because you want ones that pay high dividends, for example. So you've got a watch list that's already tight, and therefore this doesn't really change. You may be somebody that's set on your calibration. Now, calibration is basically how sensitive the UFOs are to buy and sell orders. The more sensitive they are, the more orders they show, but perhaps the less probability they have. The less sensitive they are, meaning the more strict they are, then they'll show less UFOs, but they might be more probable. It's set at a default of 0.5, and most people use it at 0.5. It's kind of in the middle, right? A balance between the two. Some of us will use a Fibonacci one, which is 0.618, but depending on these other variables, doesn't necessarily mean that's going to make too much of a difference. But let's say, for example, you say, right, I'm going to stick my calibration to 0.5. I'm happy for it to stay in the middle. I want to do back testing on Apple. For example, data set, I'm going to stick to 1000 bars. Okay. That, by the way, by sitting on 1000 bars, then it doesn't matter which time frame you load, because it's still 1000 bars either way. If it was 100 days or 2 years, well, 2 years on a 5-minute chart is a lot of data. 2 years on a monthly chart is 24 bits of data, right? So keep the same data set in terms of the amount of bars that it loads, the amount of candles that it loads. And then that way, if you're stuck on all of these, let's do this. If you're stuck on all of these, this one is the one that you can then start to play with, as an example. So let's go to Apple, let's load 1000, let's go to the calibration and we'll have a look at that. I've just seen your question there, Steve. Give me a sec whilst I load this. So Apple, 1000 bars and 0.5, wasn't it? So edit study, 0.5, and let's load 1000 bars, which I think it is already. There we go. So before I continue with this, let me just answer this question here from Steve. So how is that stat calculated? Does it look back in history and determine how often price bounced between the opposing UFOs at the time? Yeah, exactly. You've hit the nail on the head there, Steve. Exactly. So that's why loading the different amounts of bars changes the number, because it's looking back over more data or less data and then saying how many times did price move between the UFOs? How many times did it move between that one to that one? Or that one to that one, the closest opposing UFOs. How many times, or what percentage of the time, did it move between buy and sell UFOs? So it either hit the buy orders, then went to the sell orders, or went to the sell orders, then went to the buy orders. Now, once we cut the live stream, or to the free stream, because this will be a whole topic in itself, we'll then go through what that might mean in terms of your profitability. because it's an easy mistake to make to assume that the higher this number, therefore the more profit you make. That's not necessarily true. It kind of works that way, but it's not necessarily true, because if that number is 60%, but you risk 1 to make 1, you're not going to make very much. If it's 60%, but you risk 1 to make 3, then that's very, very decent returns. So moving between UFOs can be in different places. They can be really close together, or they can be really far away. So yes, ideally the higher the number, the more profitable you can be, but not necessarily, which is why backtesting needs to come into it. But we'll expand on that in the next half. So before we cut to the free stream, let's have a look at Apple. Let me just check other questions here. How the probability cone indicator works. Can you go over all its configuration parameters? Right, okay, brilliant. So Fernando, you're asking really great questions about all the different indicators on top. Now, top is a new thing. In fact, let me show you. If I go to add study, look how many indicators there are on here. There's loads. There's more on other platforms, to be honest. I would say a lot of them you don't need, which is why Top's pretty good at keeping these all pretty tight. I think you don't have hundreds and hundreds you could choose from, but you've still got a pretty extensive list. Now, each of these indicators is a variable in and of itself and can be used with different indicators in and of themselves on top of the UFOs and the climate and the EMA and the other things that we use. So I will put my hands up to this. I have not used every single one of them. I do not know how all of them are programmed. Most of them, other than auto climate, auto UFOs and Tom's strength levels, all of these are coded by other people. We didn't create these. You know, you can get moving averages on any platform. You can get Ichimoku Cloud on many platforms. You can look at earnings on anything, Bollinger Bands, and what was the ones that you asked? So the probability cone, probability envelope, and Tom's as well. So yeah, depending on which ones you're looking at, depends on whether or not we even coded them, and therefore how they work, and therefore how much we know about how they work, if that makes sense. And again, I am very basic with my trading. I go to my auto climate, my EMA, my auto UFOs. I make tweaks from backtesting based on timeframes, calibrations, things like that. But I don't really add any other indicators in. I never have done. Not to say you shouldn't. It might be that from this list, I'm just going to eyeball it and say there's 50 on this list. Let's say there's 50 on this list. Perhaps a combination of all of them increases probability to a huge amount. I just haven't tested all of them or combinations of all of them with each other. I've stuck to the more basics of the methodology because it works for me. And over time, I test different things and I add different things in or take different things out over time as I test and I back test and I forward test and I see what might work a little bit better, little tweaks that I can make. But I'm not the expert on all of these indicators. And again, I know, Fernando, that's probably frustrating from your perspective because you want to know how these things work. I would suggest to have a look at what Jose does. In fact, I don't know why I didn't just think of this. If you go to tradewithufos.com/live, this will be where you get your questions answered, Fernando. Because it's going into all of the different indicators and all of the different background and how it works on top and things like that. And Jose is an absolute fountain of knowledge for these kind of things. He has gone through nearly everything to do with trading forever, and he's very good at explaining them all as well. You see here it says top session on a Sunday with Jose. So today being the 9th, that's me. Top session, which are all to do with top and all of the indicators included in that. Jose is doing the session at 11 AM Eastern. So if you can watch that, even if you can't watch it live, watch the recording. That should really help to answer these questions. Because like I said, for me, with all of these list of indicators, I haven't used all of them. I haven't used them in combination with other things. I haven't tested all of them. So I wouldn't want to tell you something that I don't personally know to be true, right? I wouldn't want to just parrot something that somebody said to me. Whereas with Jose, he can obviously expand on these things in a much more accurate way, and he can answer your questions a lot more in depth and give you real answers to these things that I can't give you. And I'm sorry I can't give you those answers, Fernando, but hopefully that makes sense, and hopefully Jose can help you there. So coming back to our example of testing and using back testing and things like that, and just to say on here, I've just told you about the UFO stats and the variables that go into that. Again, those variables can change with any one of these indicators you put on. You know, 47% likelihood, in this case, that price moves between UFOs. But what if you added a different indicator on? What if you added 2? What if you added 3? What if you added 4? What if you added 1 on certain timeframes and 1 on another time frame? Those things will alter the likelihood that price goes in the way you think it's going to go. It basically increases or decreases your probability level. And each of these studies, each of these individual ones, is a whole other variable in and of itself, let alone combining all of them. Which is why, for me, even in my 8.5 years of trading, I don't know all of them. I haven't used all of them. I think someone like Jose is very special in that case, in the sense that he has put in a lot of time over many years, and he's also very technically minded to understand the depth of all of these things and have tested all of these things, or most of them, and know it all. For me, I stick to basic methodologies that work for me. I say basic, but you know, UFO methodology, EMAs, I might add or change things based on a couple of other things, use slightly different indicators occasionally when I test them, but that's why it is like that. So with Apple, in this example, we have a 144 time frame, we have 1,000 bars loaded, and we have 0.5 on our calibration. Now let's say my question was, do I trade a 144 minute or a 240? So all I would do is come to 144. Let's go to my Excel again. So let's say with this, 144 or 240. 144 gives me a number of 47.81. So let's just put that in. I've just seen your question on there, Steve. I'll get to you in a second. I've forgotten the number now. Was it 47 something? Yeah, 47.81. Okay, so 47.81 is what I get on a 144. What if I look at a 240? If I look at a 240, I should get a different number. No idea whether it's going to be higher or lower. It depends. Of course, the theory being that these Fibonacci time frames, which are the 144, the 55, we also use the 21. Going higher up, we use the 377. In theory, those Fibonacci timeframes work better, and in this case, that's a good example that it does, because here we have 37.8. So then if we come back here, we just make a little note of it, 37.8. Well, if all of these things are fixed, and the only thing you've changed is the time frame, well, which one would you rather pick? I know which one I'd rather pick. I'd rather use the time frame that has more probability that the UFOs work. And when I say UFOs work, I do this because it's the amount of times that it moves between UFOs. And therefore they can actually work and make money on lower numbers because UFOs are further away from each other. But in general, the higher that number, roughly, the more likely you are to actually have profitable trades. So you can then just change those variables. Now, what if you decided that you were going to use a 144 anyway? That was the thing that was set, and you're not too sure on which markets to trade. So in which case, this one is the one that's up for debate. So let's say you're looking at 20 different stocks and you want to get that down to 5. Well, maybe what you do is you keep it on a 144, you keep it on 0.5 calibration, you keep it on loading 1,000 bars, and you look at Apple. That's got 47.81. You look at, maybe you look at Google, and that's 55. So that's, so far Google's winning, right? You might look at Facebook, and that's 44. So far in ranking order, in terms of what's got the UFO stats, we had Google, then Facebook, then Apple. Or no, Google, then Apple, then Facebook. Let's say you then look at McDonald's, 42, so that's the worst so far. Kellogg's, 50, so that's now second on the list. And you would go through and just write a note of them in an Excel spreadsheet, or by hand if you want to. And then let's say you've got a big list here of, let's just do A, B, C, D stock, right? So you've got loads of these different stocks. and you've got 57, or sorry, 47, 51, 48, 32, 52, 60, 41 and 50, and you only want to trade, say, 3 of them out of this list, well, you go, let's pick these, because they have the highest probability that the UFOs work, that price reacts to that UFO enough to go to the next UFO. So hopefully that makes sense in terms of the UFO stats and how you can use that as a variable when you're testing to even decide which markets you're even going to test, or to even decide which time frames you're going to test. I find this a really efficient way before I start back testing on something of going, well, I'd rather back test something that already has things going for it, right? And rather than me go through and collect all of those trades on one time frame and then collect all of those trades on a different time frame and work it out myself, this number kind of does a lot of that for me. Not all of it, because that's not taken into account what the climate is. In theory, if the climate's down, then this red UFO has more... Oh no. Can't remember how I did this before. I've now made a giant arrow. And I think I had... How did I do it? Shift, control, down? No. Control, down? No. Okay, well, we're going to have a giant arrow for now until I fix this. So, in theory, if we have a thick red dot, we have more probability with this one than we do with this one. Because as price is coming down, as we have probability downwards, sell orders work more than buy orders. Buy orders are more likely to be cancelled if the climate is down, and vice versa. So that number doesn't take into account EMAs, doesn't take into account auto climate, doesn't take into account any of those other indicators you could use, doesn't take into account any of that. It just takes into account how often price moves between our UFOs. So in theory, the larger that number, well, then once you then lay on climate and EMA, well, then that starts to make things a lot more interesting. So hopefully that makes sense. So just looking on chat boxes here. So Steve asks, does Jose's session focus on options? Not just on options. Now top is very, if I just come back to it here. So it's on Sundays. Top is very useful for options traders, and therefore a lot of the sessions will be using options, just because it's a very good tool for options traders. But it's also a good tool for stocks traders, or even in the case of backtesting and things like that, or in the case of doing analysis, depending on where it's connected to, as in whether it's TradeStation and you're getting TradeStation data, or whether or not it's sort of broker agnostic in that sense. Then you could use it for Forex analysis or futures analysis. You wouldn't, you could maybe place trades that way, but it's the power of top is mainly for options trading, and then I would say secondary would be stocks. So when you're in those sessions, if you're not an options trader, if you get in there and you ask these questions, like Fernando, very great questions about these different indicators. If you get on that session and ask questions, Jose will answer them. And if he can't, then he'll do it in the next one, and he'll tell you he can do that. He will always do his best, of course, to, as we all do, to try and make sure that we are answering the questions that the people in the room that are watching have. Or if we're getting a lot of emails or a lot of questions about the same thing, then of course we'll do those in those sessions. Now for me, like I said, I use this methodology in its basics, as it's foundational. And then what I love about trading, and this is what's so great, and so great, Fernando, for asking all these questions about the indicators. Look how many different variables you can track as well. For some people that's overwhelming. Oh, there's all these different things. What do I pick? How do I know? Pick one. Pick one that makes sense to you. Pick one that you like the look of. Pick one that you like the sound of. And add it to your system. Add it here. Track it. If your UFO also coincided with XYZ indicator, did that increase the likelihood that it worked or decrease the likelihood that it worked? If you find out that it increases the likelihood that it works, then perhaps you then say, that's now part of my plan. And so where we all start, let's do a blank thing here. where we all start with our foundations. I don't know what to do about my gigantic... Is it that? How do I get this small again? Man, I'll figure that out another time. We have giant writing for now. Where we all start with the same foundation. We may have various paths that we then go down because there's so many different variables to track. And we all come up with our own individual strategies that work. That's what's really cool. Is that if I said to you, in order to be a profitable trader, you have to understand and use all of these. Or some of them. But you have to understand that and that and that and that and that all with each other. And if you don't do that, you won't make money. Well, then it puts you in a box where you have to learn certain things. Now, if that were true, then there probably wouldn't be hundreds or maybe thousands of other choices that you have, of other indicators you could use, other timeframes you could use. It's brilliant that there are combinations of variables in the millions of chances, billions of different combinations you could make that could make you money. You start with a foundation because otherwise it's hard. The foundation for me is this. The foundation is UFOs, autoclimate. That's a great foundation, and by itself it's fine. But hey, if you want to add stuff to it and you want to track stuff, nearly always people will ask me questions like exactly these. What about that indicator? What about that indicator? What about this time frame? What about that thing? What about this correlation? Well, yeah, great. Great. I'm sure it works. Test it. It's always my answer. Test it. I haven't tested all of the hundreds of thousands or millions of combinations that there could be. So if you go and test it, then you might say, from this list, for example, you might say, I wonder, I've heard a lot about MACDs, for example. Or, I don't know, I like McDonald's, I like chicken nuggets, that sounds nice to me. Let's pick that one, randomly. Doesn't matter why. And you add MACD, apply it, you might even change these kind of variables. You might watch a thing on YouTube understanding what MACD is and how it works, or you might, if it's a top specific indicator, you might come to Jose sessions and understand that on Jose sessions or whatever. And then you might just add it to your list and say, MACD, was it present at the right place or not? You could do it as a yes or no thing. Did it coincide or not? You know? And then at the end, once you've collected all that data, you can then look back and go, did MACD make a difference? When MACD was layered on top of my foundation, did it improve things for me? Yes or no? If not, forget about it. If so, great. Use that to make your plan more efficient. Use that to make it more profitable for you. Without the foundation, I would say it's hard because you've got so many different things that you could look at. You don't even know where to start. By having a good foundation that ideally is based on technology rather than mind and thought, because that's not very accurate a lot of the time. Using technology helps us to see these things and helps us to say, we know what that means. We know that that's a thick red dot. It means probability is downwards. That means we know we should sell. Even if that's all you start with. And you say, you know what, autoclimate's the free one. I'll do that. I'll look at where probabilities are up or down. And then I will go through indicators and test them all to see which indicators tell me is the right place to enter. Great. Or maybe you just use UFOs and you go, I'm going to pick the one that's got the highest UFO stats. And then I'm just going to trade UFOs and I'll ignore everything else. Okay. Or maybe you start with a foundation where you combine a few things and then you build on it from there with any kind of indicator you want to look at, with any kind of extra strategy or different thought process you want to look at. So I am going to cut the stream now because I've been chatting on for a while. So I'm going to cut the stream to the free ones and we'll continue in the closed coaching. So those of you in there, by all means, ask me more questions. We can go into some more things on this, expand on it. I'll also go into the difference between probability and profitability based on reward to risk. So we'll do that in this session as well as we finish up for the day. In the meantime, for those that have joined on the free streaming, if you go to tradewithufos.com/Becky, you can get yourself the apps from there if you want to. You can book one-on-one coaching and you can ask questions here as well, which is great because then we can answer them here or we can answer them in videos. Join Jose on his, let me come back here, Join Jose on his Sunday sessions for top specific questions or indicator specific questions. He's your man for that. I'm more sort of methodology, thought process, planning, backtesting. That's my sort of realms of expertise. Jose as well, to be fair. But yeah, join Jose for those kind of questions as well. He's brilliant to help you with those kind of things. So I'll see you guys next time in a couple of weeks. I'll be doing other sessions in the meantime, Forex and stocks, so I'll see you on those. Next sharpening for me will be in a couple of weeks, so on the 23rd, so I'll see you then. And for those of you in the closed coaching, stay with me for a sec whilst I cut the stream. See you later, guys.